let's welcome on board Soumil Mehta and ask him about what he's making of the market right now. Soumil, hi, good morning. Good to have you on the show. Soumil, how significant is this 23,900 level on the Nifty? And yesterday is breached twice intraday. What is that telling you about Nifty?
Good morning to everyone. Nifty is still trading about 20 and 40 daily moving average. That is a very important part right now. We've been trading in a small range at this point of time. Probably the resistance is around 24,200 and the support is around 23,900, 23,800. So these two levels, coming back to your question, 23,800 is very close to 40 daily exponential moving average and the previous swing low, which we saw last week. And 20 daily exponential moving average is around 23,700. So these two levels are extremely important at this point of time, and I'm not expecting these levels to break on the downside. I'll be expecting more consolidation around this area. Stock specific action and sector specific action will continue, of course. However, we will see markets, Nifty, Bank Nifty taking support at the averages, short-term averages, and then again starting the move, continuing the move on the upside. For Nifty, 200 daily exponential moving average, which is around 24,430, will be a very, very crucial hurdle as well in the very short term. However, in the very short term, more consolidation is expected. In Bank Nifty, if you see, Bank Nifty is already outperforming, making higher top, higher bottom formation, way above 20, 40, 200 daily moving average. Yesterday, Bank Nifty has taken support at 10 daily exponential moving average, which is a very good sign. And now, what does this mean for short-term trades? I think for Bank Nifty, 57,500 remains very crucial, and the next level on the downside is 57,000. So these levels are extremely important in the very short term. However, the trend remains positive, and the strategy should be to buy on declines.
Right. Okay, Soumil, stay with us. Okay, let me now welcome on board Mayuresh Joshi as well. And Mayuresh, stick your neck out. What more can we see on a KPIT and the repercussion and ramification for the rest of the IT pack too?
Morning, Aisha. I think things were not getting better for the sector as a whole in terms of how it's now gone through in terms of the R&D players as well. The expectations in terms of revenue decline might also mean that a large part of the EV investments that were basically getting front-loaded over the last few quarters, and the reports were suggesting a couple of quarters back that a lot of players have pulled back on their capex plans in a substantial manner in the European context, as well as the North American context. I think as that pullback happens from the OEM side, you're obviously going to get the ripple effects felt down in terms of software providers, ER&D providers, including the likes of KPIT. So I think it's a matter of time when the EV players start coming back on their capex track. Seems very unlikely, Aisha, that the first half, which is full of uncertainties related to the West Asian crisis, inflationary issues, a 25 pips hike by the ECB, that a very aggressive rollout might probably happen. Means that the annualized number will obviously be off track. So IT, I think growth vectors are clearly missing for the sector as a whole as we see it.
Right. Soumil, let's try and understand what else is happening in the market other than, of course, IT weakness. Any sectoral plays, stock-specific calls that you may have for our viewers?
I think there are two sectors which I wanted to highlight. The first one is, of course, Pharma. AB is talking about Pharma. There are a lot of stocks which have just started moving up, like Max Health, Zydus Life. Lupin is doing great as well. They started a new move on the upside. But there are a few stocks more which have done really well. Glenmark Pharma has corrected and started moving up as well. So Pharma sector definitely is looking great, and I'll be expecting this move to continue in Pharma. The other sector which I like is Defense has corrected very sharply in the last couple of years. A bounce we've seen in the last couple of months, and then again a small correction. Now it has again started showing some strength and taking support at very crucial supports and averages. So I'll be expecting these stocks to do really well. I have HAL on my list. HAL looks really good from here. In the very short term, you can keep a stop loss around 4,260 for HAL, and I'll be expecting the stock to again start a new move for the targets of previous swing high of 4,800 levels. This is a medium term outlook, for HAL. For another, support for HAL would be around 4,140. So keep these levels in place, and I think defense would do really well. Max Health looks great as well from the pharma pack. It has given us a multiple month breakout in the last week, and it has started moving up, making higher top, higher bottom, trading above averages. So I think you can keep a stop loss around 1070 for Max Health. In the medium term outlook, my targets would be around 1220, and the next target would be around 1260. So these are two targets I have. But I think these stocks have much more potential than having a short term or a medium term trade. It can go really, can give us very good targets on the upside.
Right, okay. Defense and healthcare.
Mayuresh, I wonder how you're looking at the metals pack at this point, because we've seen a few cuts on the Nifty metal index plus some of the frontline names. Aluminium also has been volatile. How should one look at the pack currently?
Morning, Harsh.
Good morning.
I think in terms of expectations of that entire war premium, I think that's clearly coming off for ferrous, non-ferrous base metals, whatever you want to call it at this juncture. Aluminium, as you specifically mentioned, I think the expectations in terms of commercial production starting in a couple of Middle Eastern sites will obviously add to the supply. But one thing which is common as an underpinning theme for the sector as a whole is that inventory levels are pretty low as we speak. And at some point of time, as demand starts coming back, the restocking element will start coming through, reflecting positively in terms of operating leverage being created by better LME prices. But at least at this juncture, I think supplies might start coming through. The war premium comes off. LME prices obviously come under the pump for a whole host of these reasons mentioned together. And the entire China factor, Harsh, I think what probably happened in terms of the China push through, in terms of a lot of these commodities into the global markets, might also pressurize prices from an immediate near-term perspective. So we're carrying a very neutral view on the sector, very, very stock specific, actually.
Okay, that's the view coming in on metals. But the other talking point.
Welcome back. Soumil Mehta, of course, with us. Mayuresh Joshi also with us. Mayuresh, I wonder how you look at the Kotak deal. Is this a steal? Is this fair value? How should one read into the deal?
Also, in the absence of the relevant numbers, it's very difficult to how accretive this is going to be. But even if you go with the base case scenario that they acquire the entire net asset value base, as read through a lot of media reports, this seems to be a fair price that they've probably paid for the Deutsche India business. Now, how much of these synergies start building in terms of the CASA built up? How much of these synergies start building in terms of the core business actually going higher? I think that time will decide. You've seen acquisitions like this in the past as well, with Axis Bank taking on Citi's consumer business, as well as Kotak taking on, if I'm not mistaken, the credit card business of Standard Chartered as well. So I think it's all about synergies and how much it can add. I don't think it can add substantially, but yes, if it's a reasonable deal at a good valuation, I think it will be sentimentally positive for Kotak.
They're saying it's ROE accretive, Mayuresh. Now, Kotak's ROEs have been the challenge, right? And therefore, would you take much comfort from the fact that it's ROE accretive? Is that maybe one of the positives to look at?
Possibly, but ultimately thinking it all boils down to how much are they gaining from the entire deal and how much are they paying for that. So I think that's unknown and really difficult to gauge it.
All right.
Soumil, how do you look at Kotak at this point?
See, in the banking pack, overall, I'm very bullish on the banking pack. However, Kotak has just sold off, and it is closed below 20 daily moving average, 200 daily moving average. So in the very short term, yes, there is pain. I would expect the stock to go down till at least 380, 375 levels. However, I don't see too much of a pain here. If it closes below 270 levels, then probably the medium term trend reverses. But at this point of time, I would avoid, keep it in the wait and watch list, and then start building on position after it closes about 200 daily moving average, which is 400. So 400 is a very, very crucial hurdle for the stock. I'll be positive only if it closes about 200 daily moving average.
Soumil, we saw the rollovers happening yesterday. It's if you look at the percentage of rollover, it has been much higher in the versus the last 3 months average. What do you make out of that as well?
Rollovers have been good because the banking pack overall is looking good. And in Kotak Mahindra Bank, Kotak is making high top, high bottom formations on the weekly, monthly charts. And that's the reason I'm not too bearish on the stock, because it is making high top, high bottom formation. So we have seen a good correction here. Probably this is a good buying opportunity, but I want to wait and watch and see if it closes above crucial levels, and then probably we can go in and take a call on the medium term outlook.
At 375, Mayuresh, are you a buyer in Kotak?
No, Harsh. So I think we're still maintaining a neutral view as far as the large banks are concerned. I think the mid-private banks selectively seem very, very attractive to us because they're probably in the sweet spot where they've managed their balance sheet very well, where deposit accretion has not been so much of a lag issue of sorts. And therefore, I think maintaining all the risk parameters, including risk-weighted assets as a percentage of the overall balance sheet, the GNPAs, NPAs very much under control, leading to better NIMs and therefore better ROEs, ROAs. So I think Karur Vysya Bank probably seems very well placed. We continue holding that.
Mayuresh, how do you look at some of the broking companies after the RBI's capital exposure norms kicks in today?
So they will get impacted, monetary usage, but a large part of the business will depend in terms of the expectations that largely get built in terms of the absolute number of client additions actually improving every passing quarter, and in terms of the core transacting revenues also probably being on a steady state basis. So I think there will be a sentimental impact, but as a long drawn theme, our belief is still that capital market participants might continue doing well. Grow remains one of our topics when it probably comes to capital markets.
You go out and buy today if it falls?
Oh, absolutely, yes.
Okay, sounding very confident. What else, Mayuresh, in terms of ideas in a market like this?
So I think PAR as a theme will continue doing well, Harsh. And in our opinion, we've played out quite a number of stocks which have done exceptionally well within the sector itself. I think one actionable idea at our end, which probably looks good at this juncture, is Skipper. There is expectations that the ordering that will probably come through can be substantial as far as Power Grid is concerned. The expectation is 45,000 crores worth of order that can probably come in, specifically in the 785, 800, or even the 1150 HVDC or the high voltage cables or transmission lines that we are speaking about. Now, Skipper probably has a very large ownership in terms of the the tower infrastructure, the telecom infrastructure when it comes to EPC as well. And therefore, I think the revenues that they have recorded, the order book of almost 8,500 crores, gives it a very strong revenue visibility. Margins have improved in an FY26 over FY25 at 10.4%. ROEs have gone up to almost 14% as we speak. And therefore, from a sector construct, if you probably look at how the sector is probably placed over the next 5 years, the expectation is that the intergrid transmission capacity interstate will actually go up from 119 gigawatts to almost 168 gigawatts. The number of transmission line in absolute number, the government target is 650,000 circuit kilometers from 485, which gives a huge potential, not just domestically, but even globally. I think the expectation is that the actual number of transmission lines from 5.5 lakh circuit kilometers might actually go up to around 11 to 12 lakhs over the next 5 to 6 years. So structurally, PAR looks good. I think Skipper looks very well placed, both from an earnings and a balance sheet perspective.
Mayuresh, what do you make of the commentary coming from Vodafone Idea? That's the other one which came out with commentary, double-digit revenue growth, margins, or rather EBITDA set to triple, cash EBITDA set to triple over the next few years, and that very ambitious 45,000 crore capex.
So I think if you probably look at a combination of all these factors put together, they have to first of all upgrade their legacy systems to the 5G ecosystem, and therefore I think the capex that they probably put out, I think a step in the right direction. Now, for the sector as a whole, there are expectations that there will be further ARPU increases as we see it. A large part of the overhang that was there in terms of spectrum-related payouts, etc., the government dues, etc. Now that has received a lot of clarity. And therefore, I think over the next few years, if you probably lay out on how the discounted cash flows might look out over the next 10 years, I think there is still element that they will still be keeping out or paying out a lot of cash in terms of their obligations or dues from a regulatory perspective and servicing their creditors as well. And therefore, I think the other way to play telecom with the news surrounding Vodafone, the consolidation that we've probably seen in the industry might actually be Indus-Towers. I think they might actually be one of the bigger beneficiaries as we see it.
Okay. I want to also quickly try and cover how you're looking at the real estate space, Mayuresh. It's been one of the big outperformers over the last month or so. How should one look at the fundamentals at this juncture?
Also, two things. One, I think the data which has come out specifically for Mumbai registration, Jan to June, was a record registration 6-month window that we've probably seen. However, I think in terms of the inventory built up that we are speaking to a lot of listed as well as unlisted players, that seems to be on a sticky ground. The second element, obviously, is that there are a lot of sitters now. Again, who are probably looking at some element of a price decline to come through, but the developers are still holding on to their rates as we speak. How long this will continue, anybody's guess. And the third element, I think, in terms of pure accounting, I think the unrealized revenue on their balance sheet obviously will get recognized over a periodicity of time. Having said that, our own sense is that within the space itself, we continue holding Phoenix Mills. A clear disclaimer, we hold that stock both in our domestic and global portfolios. Our own sense in terms of mapping on how they are probably developing not just the residential portfolio in terms of the residential part of real estate, but also the hotel business and their mall business in a very calibrated manner without putting too much of pressure on the balance sheet. The pre-leases that are coming up are getting premium as we see it across small spaces that they probably have. And therefore, I think the kind of performance that one really expects Phoenix to deliver, they can continue a steady show even in volatile times. So I think that probably remains our only and top pick in the real estate space.
Okay, quickly, let's take a chart check. Soumil, thanks for very patiently waiting by while we've gone through all of this. Cupid, give us a sense. Stock has been on a tear. What next?
Just give me a second. I'm trying to pull up my charts. Just give me a sec.
Yes, it's. I know it's a less covered name, Soumil, and therefore, but very curious because the kind of move on the stock has been extremely strong. So just give us a sense of how you're looking at it on charts.
See, in the last, if we see in the last 3 months or 4 months, it has been in a run. It's been very aggressive move on this stock and high top, high bottom formations. Moving up very quickly, 5% almost every second day. I think from here the trend still remains positive till the time 20 daily moving averages, not closing below 20 daily moving average, the trend remains positive. The support levels, I can only give the support levels because the trend is up and I'll be expecting much higher targets on the stock. The support levels would be around 174, which is the previous swing high where the last time we saw a negative close on the stock. And then the next support would be around 20 daily moving average, which is around 167. I'm not expecting this stock to go below the previous swing low, which is 174. So keep an eye on these levels. I'll not be suggesting any fresh buying at this point of time, but I think you can hold on to this stock with a stop loss around 174 if you're trading, short term, medium term. But I think in the long term, the structure is great, and I'll be expecting more upside from this stock.
Soumil, two stocks, MCX, Jeffries has initiated a buy with 3,600 price target. How is it looking for you?
The MCX is definitely looking good to me. In the very short term, we've seen correction in the very short term. I'll be expecting the stock to again take support around 2,700 levels and then again start a move on the upside. At this point of time, I'll wait and watch till the time I do not get a close above 2,950. I'll keep an eye on this and stay away for a little while. Wait for a breakout. Once we get a breakout, I think the next level would be the previous swing highs of around 3,300, 3,400 levels. So good risk reward at this point of time, but wait for a breakout.
What about Vodafone, Soumil?
See, Idea, Idea is doing great recently. It has been creating a triangular pattern formation in the last 3 to 4 weeks. Now, I'll be expecting this triangle to break on the upside, but the support is around 13.50, which is 40 daily exponential moving average. I'll be expecting more consolidation and break on the upside. So I'll be positive in the short term, medium term, both. Markets have shown strength around these levels, around 23,800. And I think from here, I'll be expecting a good move on the upside. Once we close about 24,030 levels, I think we'll have a very good move on the upside. I'll be pretty positive. I'll be betting on autos. Autos are looking really good. My two stocks which I've chosen today is M&M and Ashok Leyland. These two stocks are looking really good. Ashok Leyland has just started moving above 200 daily exponential moving average. So I'll be looking to have a call on this in the very short term. Stop loss would be 155 for Ashok Leyland, and my targets would be around 172.
Okay, Soumil, great to have you on the show, and thanks as always for sharing your trading ideas.